Ever wondered what Dow Jones, Nasdaq, and S&P 500 are and how they work together to inform an investor? These three names are often thrown around in financial news, but what do they mean to you, the investor? Well, buckle up for a quick, enlightening journey into the world of stock market indices. First up, the Dow Jones Industrial Average, often simply referred to as the Dow. Named after Charles Dow and Edward Jones, this index was first calculated in 1896, making it one of the oldest stock market indices. The Dow is composed of 30 of the largest publicly owned companies based in the United States. These companies span across various industries, providing an overview of how the U.S. stock market is performing. The Dow is price-weighted, meaning higher-priced stocks have a greater impact on the index's performance. Next, we move on to the Nasdaq Composite. Unlike the Dow, the Nasdaq is a tech-heavy index, including more than 3,000 companies, with a significant number being technology and internet-related firms. Most of these companies are smaller, more volatile stocks compared to the giants in the Dow. The Nasdaq is market cap weighted, which means companies with a higher market value have a more substantial influence on the index's value. Last but not least, the S&P 500. This index is a bit of a middle ground between the Dow and the Nasdaq. It includes 500 of the largest companies listed on the New York Stock Exchange or Nasdaq, spanning all sectors of the economy. The S&P 500 is also market cap weighted, offering a broad snapshot of the U.S. corporate landscape. Many consider it the most accurate representation of the market's health. Now, how do these three work together to inform an investor? The Dow, Nasdaq, and S&P 500 each provide unique insights into different segments of the market. The Dow gives a snapshot of the industrial giants, the Nasdaq offers a glimpse into the tech sector and smaller companies, while the S&P 500 provides a broader view of the overall market. By observing their movements, investors can gauge market trends, investor sentiment, and the health of the economy. In essence, these indices serve as a compass, guiding investors through the vast ocean of investment opportunities. They provide a benchmark for individual portfolio performance and help investors make informed decisions about where to place their bets in the market. So there you have it, a brief overview of the Dow Jones Industrial Average, the Nasdaq Composite, and the S&P 500. Remember, understanding these indices is just one piece of the puzzle. Successful investing requires careful research, strategic planning, and a dose of patience. Happy investing.